Good afternoon, this is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa with the market recap for the week ending February 16, 2018. Fairly solid week on the grains. This week corn roughly up a nickel, both on the old and new crop. New crop beans, March beans were up 38 cents this week. November beans up around 21 cents. Wheat 7 cents higher. Cattle 4 cents higher. We did see the S&P make a pretty substantial rebound this week after a lot of volatility in the stock market and in the macros over the last few weeks. It was up over 100 points, and we did see the dollar back off again this week to some degree. Now, getting back to the grains, the catalyst this week to get the market rolling was the soybean meal, and more specifically the concern on weather in parts of Argentina as we approach the middle or tail end of some of their growing season, the impact that may have on not only corn production but also soybean production. Keep in mind, Argentina is the world's largest exporter of meal, thus the market's starting to be concerned about smaller production levels out of Argentina, which could create some more bean needs, or meal needs, I should be more specific, from pressures out of the U.S. To fill some of that worldwide need. So thus the bean market, and again led by the meal, had a pretty good run this week. So also keep in mind, as far as soybeans are concerned, it's very seasonal to have the bean market and the meal market rally the first 2 weeks of February. And interestingly enough, if you look at soybeans over the last 3 previous years, kind of interesting what the seasonality has brought. Both a year ago in 2017 and 3 years ago in 2015, from roughly the 1st of March until around Memorial Day, so that 90-day window, soybeans dropped nearly $1 on new crop beans. Now, 2 years ago in 2016, that was a year where the South American production went south in production at the very end, and we saw a pretty good sized rally 2 years ago. The thing is, we started that rally about $1.50 lower than we currently are. So keep in mind the seasonality of that may fall into place again depending on how the weather fares out. The only other thing I would add, in those previous 3 years, those years where in the U.S. Bean carryout actually decreased as the calendar year went on. This year that does not look to be the case, especially after you look at the S&D earlier this month, again showing a decrease in exports, thus raising the U.S. Soybean carryout, and world carryout stocks look to remain pretty solid. Now keep in mind, Brazil at this point looks good or very good. They are a little behind in harvest progression at this point because it's been a little wet. Some feel that could create some concern on the second planting of the safrinha corn crop, but we'll watch or monitor that as time wears on. But all in all, fairly positive week as far as the grains are concerned, gaining some momentum led by soybean meal. Now, as producers, may want to look at this rally in the soybeans and look at that seasonality that I just brought up, and may want to be somewhat aggressive for this time of year, getting some new crop beans locked in with that in mind. Basis levels also broke this week. Movement has picked up because of the rally, because of weather, logistics, etc., etc. So we have seen movement pick up in the last several days. That has had some negative impact, obviously, on basis. And when you look at many parts of the Midwest, we're only 45 to 60 days away from going back to the field, so that window to make some movement prior to the planting season is narrowing. So producers need to look at that too as far as logistics. We still have to keep in mind there's a tremendous amount of old crop meat, corn and beans, to move, and from time to time that's going to have some impact on basis. Bean exports continue to be disappointing. Corn exports have been very good over the last month. Starting to see some positive signs there. This afternoon, the Commitment to Traders report came out, and this is as of Tuesday. But as of Tuesday, the funds took off 72,000 shorts this past week in corn, and now they are only short 10,000 contracts of corn. took off 25,000 shorts in the wheat market. They're now short 56,000. Funds added 52,000 on the beans, and now the funds are long 42,000 beans. And soybean meal, the interesting one, almost 20,000 contracts new this week. Funds are long 70,000 beans. So commitment to trades report looks coming into Tuesday morning now. Maybe a little, there's not a lot of short covering to do anymore. Let's put it that way. If anything, the market's a little bit long. So we'll see how that progresses. Keep in mind there's no markets on Monday due to President's Day. So the weather report come Monday night / Tuesday morning for Argentina will be key on the direction of this market going into next week. Lastly, just a couple of comments on the cattle market. Cash trade this week was once again positive. As I mentioned earlier, the futures market was up nearly $4 this week. Demand quietly continues to be very solid. The protein demand in the world for all types of protein continue to be solid. That storyline with meal, that storyline with beef, pork, poultry, etc. That's encouraging going forward from a demand specter on all the ag commodities. If you have any questions, feel free to call us here at the office. Phone number is 800-373-2525. And with that, everyone